Hey, welcome back to another update on this whole GameStop versus 1% versus Wall Street bets drama. And just yesterday, a lot of firms, trading brokerages like E-Trade or Fidelity or Robinhood mostly, Webull, they have all stopped the buying of these hot stocks like GameStop or AMC. So people were pissed because they only allowed them to sell the stock but not buying it. And a lot of CEOs went on TV to talk about why they did this. They were like, "Hey, we want to protect our users and blah blah blah." So I did quite a bit of research and I found out that it's actually all BS. They're trying to protect themselves from doing it. And let me explain. Now, there's a lot of conspiracies out there talking about how like how they are trying to protect their one of their investors and one of their market makers, Citadel. Like if you're Robinhood or Webull, they both use Citadel, and Citadel just put like $2 billion into Melbourne Capital, try to rescue it. So there's definitely a conflict of interest there, and people are saying that Robinhood restricted all of these buys from our users in order to prevent the price from going up. So that is a sort of like a pretty valid conspiracy, but there is really no proof of that. We'll leave that to the regulators to figure out. But what's really happening was that the CEO of Webull went on Benzinga yesterday to talk about what's behind the scenes and why they stopped the the buying of these stocks and why all of these firms did it all at the same time. So here's the reason why. So all of these little firms, right? Let's say you have, let me just say, you got Robinhood over here, you got Webull over here, you got Fidelity, E-Trade. So all of these companies, they use a company called DTCC. So this company is called, let me make this 2025. So DTCC. This company is called Depository Trust Clearing Corporation. This is the company that all of these brokerages they talk to in order to do their clearing of the trades. So Robinhood, let me make this smaller. Robinhood, you got Webull, E-Trade, or Fidelity. So they all go through this company for clearing their trades. So what is clearing of the trade? Clearing of your trade is when you, let's say you buy a stock or sell your stock, and then another person gets the stock. In reality, you don't really like. Back in the days, you used to have to go down to the exchange, give them a stock certificate, and then the other person gives you cash. That's how you exchange stocks. But nowadays, that doesn't really scale, so we had to do it digitally, and all of these companies route these orders information into this company who will finalize all your trades for you to settle the trades for the users on their platform. So this is the company that's behind all of these companies. They all use DTCC. DTCC handles 95% of Wall Street's trading traffic. So it's huge. This is the mother of all clearing corporations. So usually, in normal market atmosphere, DTCC requires 5% or small amount of percentage of margin from these companies in order to clear the trades. So let's say somebody bought like $100 worth of Robinhood off of a GME stock before it was crazy. DTCC only requires like $5 from Robinhood in order to hold as margin, just in case the person couldn't pay or somebody couldn't pay. They only need 5% of margin from Robinhood because under normal market atmosphere, everything should be working correctly over time. So, oh, by the way, this company is useful because with that, you don't have to wait like 2 or 3 days to settle your trade. So imagine you bought something, you wait for 2 days to get it. Or you sell something, you have to wait 2 days for it to settle. Like that's just not very efficient for the market. So that's why DTCC, like they're in the person in the background, they'll settle it over time with these brokers by doing the money transfer between them. But in the front with Robinhood, they'll just tell you, hey, your orders, your trade is settled, you got the money in your account now. So that's how it works. So under normal condition, they only require like, 5-10% margin from these companies. Now with GameStop, like the price of GameStop just went up tremendously every single day. It goes up like 100% plus every day. So is AMC. So this creates crazy volatility for the market. And DTCC, they don't want to be like, hey, we just bought this, like we just settled this trade for $100 today, but tomorrow it's like $300, right? And you multiply that by all of these firms and all the trades in the market, that's like hundreds of billions of dollars worth of money going up and down every single day. So it's not very stable. So yesterday, DTCC says, hey, you know what? We're going to raise the margin requirement to 100%. So if you want to settle the trades with us, we need you to deposit 100% of all these trade volumes into our account if you want us to settle it, because they don't want to go down. DTCC does not want to go down. If they go down or go bankrupt because of this crazy volatility, the whole United States stock market will crash or just stuck. Nothing will get traded because of that. So now you can see like how crazy this is. This could cascade into a whole market crash, because if DTCC is insolvent and these companies was not able to provide 100% of margin requirement, then DTCC goes down and thus the whole market goes down. And that's the crazy part about this. So DTCC asked all of these companies yesterday to raise the margin requirement to 100%. But a lot of these companies they're running on fractional reserve. They don't have all these money to cover 100% of trade. So at that point, they have no choice but to restrict trading on GME, AMC, all these crazy high volatility stocks, because everybody and their mothers are buying these stocks, and there's like billions and billions of dollars that they need to deposit into DTCC in order to cover their 100% margin required. So Robinhood does not have that money. All of these, they don't have the money. So they stop the trading altogether in order to protect themselves and to protect, like the market itself. DTCC protects the market by raising the margin to 100%. Robinhood, they had to stop trading in order to meet that requirement. So what happened last night was that Robinhood actually raised $1 billion overnight into their war chest just to cover the amount of volume that's needed and the fund that they need to deposit into DTCC in order to meet their condition of 100% margin. So right now, the market's about to open, but it's going to be limited amount of trades that you can do on GameStop and AMC and all these meme stocks. So it's still limited trade. So all these companies, they're going to do limited trades. So what I can predict is that probably at some point they're going to stop trading on these stocks once again, because there's going to be a lot more people who were pissed off about these not able to trade these stocks. They're going to try to buy them like at the market open or pre-market. So it's going to be very, very interesting to see what's going to happen next. So I hope you understand like what's happening. And to think that a whole group of Redditors from Wall Street Bets can take down DTCC and the whole market, it's incredible. But we cannot blame the Wall Street Bets people, because this whole thing started when remember in my previous video, when all these crazy hedge funds who were greedy and they shorted the stock more than the available stocks on the market just to make more money. They are the criminals. They are the problems of the market. So they probably need to be regulated so this kind of stuff don't happen again. So now we wait and see. I hope the market don't crash, and I hope this 100% margin rate requirement is still kept in place in order to prevent the total collapse of DTCC. DTCC is very important to the function of the market, and it cannot collapse. So a lot of people are saying, hey, why do we rely on a single entity to handle all of our trades? Well, the reality is that's how the Wall Street is set up right now, and DTCC has a single monopoly on trust on clearing of the trades. And people are saying, hey, we should move everything to blockchain, so there's no single ownership, and it could never go down. It's a totally right call, but the thing is, blockchain is not really ready yet for this amount of transactions per second, because we have like trillions of transactions per day just on the stock market. So it's not ready yet, but hopefully one day it will be. And I look forward to the day when blockchain replaces this whole thing. And that is it for this video. Remember, I am not a financial advisor. This video is purely based on my research and my opinion. Please do not follow everything I say. Do your own research, and I'm not responsible for what you do with your accounts. And with that said, if you like my video, please like and subscribe, and do comment below what you think. I'll see you guys next time.